Best secrets on how to invest nowadays. Investing in anything can be riddled with plenty of uncertainty, which is why understanding how stocks behave and being diligent are required in order to rise above the ups and downs of the market. To achieve long-term success, it's vital to stick with tried and true principles for investors to boost their chances and maintain much better gains. Investors have to keep an eye out to focus on the future so that they can maximize profits toward their long-term investments. If you're keen at learning what to do, here are the best secrets on how to invest nowadays. Welcome back to Best of Tens. Thank you in advance for watching this beneficial video. Smack that like button and make sure you're subscribed. Number 10. See the bigger picture. Many investors tend to stress a lot over an investment's short-term movements. However, it's much better to focus on its big picture trajectory. Don't sweat over the small stuff that the market undergoes, especially with a particular investment's short-term volatility. This is why experts highly recommend to do your due diligence on your potential investment's financial track record, company quality, and even their management efficiency, so that you can gain a certain confidence towards a particular stock. Focus on an investment's larger story, its bigger picture, so you won't have to worry about the few dollars you're losing because of how the market is behaving. While many active traders do use minute-to-minute fluctuations to base their decisions and lock in on gains, long-term investors tend to succeed much better based on their confidence of a particular stock, which may take years down the line, but with much larger gains. Number 9. Be wary of hot tips. When it comes to making investment decisions, never accept a stock tip as a valid source of your immediate investments, regardless of the source, whether it's from a trusted friend or associate. Make sure that your own decisions dictate your investment actions. After all, it is your own hard-earned money that you'll be waging investments with. Always do your own due diligence and have your own analysis after acquiring even some hints on a particular stock. Oftentimes, certain tips do pan out, but to achieve long-term success, you'll need to decide based on your own credible research. Number 8. Sell losing stocks. When a stock encounters a protracted decline, there is absolutely no guarantee that it will rebound. This is why you should be adamant and realistic enough to unload your poorly performing investments before they bleed you out. Investors may continue to hold if the stock pays a healthy dividend. However, if it breaks a technical marker or the company isn't performing particularly well, it's much better to sell at a small loss than to let the position tie up your money and potentially fall even further. It can be hard to acknowledge that losing stocks are a sign of failure, but it's much better to learn and make up for it instead of banking on an investment that will only lead to further loss without any viable returns. Number 7. Decide on your strategy and stick with it. There can be many methods and ways of picking out stocks. This is why it's important to stick to a certain philosophy that works for you. Different approaches, while often can be effective, can lead you to dangerous territory and can push you towards market timing. Market timing is the act of switching funds between asset classes, depending on the predictions of the market ups and downs. While this is feasible for traders, portfolio managers, and other financial professionals, market timing is particularly difficult and risky for the average individual investor. There are plenty of good reasons to avoid market timing and focus on investing for the long run. This is why sticking with a particular strategy is more secure if you're keen at achieving long-term success. Number 6. Pick companies, not stocks. When investing in the stock market, it's easy to forget that behind all of those letters and symbols of stock quotes crawling on the bottom of every financial report is an actual business filled with hardworking people. Investing in the stock market isn't an abstract concept. When you buy shares of a company's stock, this means you're investing in their business and, in a sense, become a part owner of that business. When picking out which stock to invest in, it's vital to know how the company itself operates, its place in the overall industry, its competitors, its long-term potential, and whether it can benefit your portfolio with the other businesses you already own. By doing your due diligence, you can raise your confidence towards a certain company and invest your money in their stock with far more conviction and belief that it would generate positive returns. Number 5. Plan ahead for times of panic. Today's market is admittedly highly volatile, and making heat-of-the-moment decisions can lead an investor to a classic gaffe: buying high and selling low. Avoid this by planning well ahead. With every stock in your portfolio, compile a journal that details your level of commitment to identify every circumstance that you might encounter and the points of action you would need to take. Identify the reasons for buying each stock and what would make you sell that particular stock. We're not talking about simple stock price movement here, since this entails short-term action. Be decisive based on fundamental changes to the business you're investing in, which could affect its ability to grow over the long term. Number 4. Gradually build up your positions. Time is always on every smart investor's side. This is a mantra every successful investor abides by, mostly because they buy stocks and expect to be rewarded not in the short term, but over years or even decades. Take your time in buying a particular stock as well, which means that you can invest a set amount of money at regular intervals, such as once per week or month. This will reflect better for you, as the stock price either goes up or down and evens out the average price you pay. You can even buy stock in thirds, separating your buys at regular intervals in order to spread out your risk to assure better positioning for yourself. Number 3. Avoid trading over activity. Keeping a constant eye on the market's activities is vital to maintaining your positions, but it shouldn't lead you to overreacting on short-term events of the market. Focusing on share price instead of company value may make you feel like you need to react, even when you should be confident in the stocks that you chose. When one of your stocks experiences price movements, understand what triggered it first before making any decision that may lead to more damage. Remember that your long-term outlook is more important than any cents or few dollars you're seemingly losing. Number 2. Don't be tempted by penny stocks. Many investors think that there's a lesser risk with buying low-price stocks. However, it doesn't matter whether a $10 stock plunges to $1 or a $100 stock does the same. It still lost almost 100%, so both stocks carry the same downside risk. Penny stocks are a lot riskier than higher-priced stocks because they are less regulated and carry the burden of having more volatility. Number 1. Focus on the future. To succeed in investing, always keep a long-term perspective. Investing requires making informed decisions based on things that have yet to happen. You can study as much data and trends as you can, but nothing is ever guaranteed. Maintain your fundamentals and invest based on future potential instead of past performance of a particular company. Short-term profits can easily entice market neophytes, but having long-term focus is vital to achieving much greater success when it comes to your investments. So, what do you think about these grand secrets on how to invest nowadays? Do you have any other suggestions? Let us know in the comments below. And while you're headed to the comment section, take a detour to tap that like button and subscribe. Then be sure to head to the Best of 10s archive, as there's much more in store ranging from entertainment, investments, and interesting tech.